going. All right, well, again, welcome everyone to the July cohort of the Saas Metrics Foundation. My name is Ben Murray, and admit more person here. And today we're going to go over an intro, just how the course works, all the links, the files, a little bit of platform overview, and then dive into some of our first lessons today, the accounting foundation, and then our bookings lesson. So a little bit about myself, if we haven't spoken, if we haven't seen each other on a webinar or previous courses. I'm a CFO by trade, been in finance and accounting my entire career, which makes sense. In the airlines and then software industries, was a SaaS CFO and still a SaaS CFO as a fractional SaaS CFO for the past 9 years, and began my software journey back in the on-premise days in 2004. Have my MBA CPA, but rose through the ranks of FP&A, financial planning analysis, at public and private companies. And really, my SaaS metrics journey started about 6 years ago when I started blogging and sharing my templates, forecast models at my blog at thesaascfo.com. Of course, we're here at the SaaS Academy. And again, I'm located in the Denver suburbs, just south of Denver downtown, about 20 minutes or so. I already had my coffee for this morning, so love a good cup of coffee to start the day. Let's see. Hey, ATT from Dallas. So today, week one agenda, what we're going to discuss today is just some course logistics so we understand what's going on. There are lots of links, there are lots of files, lots of lessons, a little bit about the demographics of this cohort for those who have filled out the student questionnaire. And then also today, we'll tackle the accounting foundation, which is really important, even if you're not in finance accounting, a little behind the scenes peek. And then if we can finish, we'll start bookings and maybe they'll push into Thursday a bit. Maybe we'll get that done today. And then on Thursday, we'll talk committed ARR, average revenue per account, and the quick ratio. And again, we're tackling pillar one of the SaaS metrics framework. Hey, Elena from Los Angeles. And then on Thursday, also, we'll do a quick self-assessment where we feel we stand with our SaaS metrics knowledge for ourselves individually, and then also for our company. You know, where are we, as far as if we're going to implement these metrics for our company, where do we feel we're in that maturity curve for our company? And then I'll have some breaks here for Q&A, but we'll get into kind of the course logistics and then how we're going about the course. So the course details again. So we'll have live sessions every Tuesday and Thursday at 10 a.m. Mountain, usually last an hour to an hour and a half. Again, this will last 6 weeks. And if you don't make a live session, I record all sessions and post those one day later to the course to another course link that I'll provide in this intro today. And then also the slides that I use in those lessons, which are very similar to what are released each week. I also post those there as well because I tweak those sometimes a bit. And then the tool, as far as the Zoom link, it's a one for Tuesday and then a separate one for Thursday. And again, I'll have the calendar invite links here in a second if you haven't added those to your calendar. Hey, Christine in San Francisco. And then lesson questions and comments can be posted in the course. So in the course, there are sections under each lesson where you can post questions and comments. I receive an email alert when you post, and I'll reply to all those. And then we also have the Slack community where you can also post questions, comments to the community. And if you want to reach me directly, you can tag me there for any specific questions. And then we'll also go through the files. There are a lot of files available in this course. And then I'm going to, well, we'll do this in a second here. I'm going to put something in the chat. Let me escape here for now. I'm going to throw this in the chat. So this link takes you to a OneDrive link, which has, and I'll show you what's in there, but it's going to have all the files for the course in there, as well as all the links, a Word doc with all the links as well. So I just wanted to throw those in the chat real quick so you could access those and download those. And then also there's a Slack invite that's in the intro course in the platform where you can, again, join the private Slack group for this cohort and all previous alumni. And then here, again, you can post questions, comments to the group, share experiences, interesting insights, interesting reads. So a nice community for anything Saas finance metrics related. And again, I'll show you where I'll have these links for you in that document. And then thanks to everyone who's completed the student survey. That tells me a little bit more about your experience, your goals, and what you're looking to get out of this course, which is really helpful. And then they're really important calendar invites for the live sessions. And we'll get to the files in a second here, but you can add the sessions to your calendar through these links. Let me just admit some more folks here. And then we have the live session recordings, which is another course. And then we have a Saas Metrics dashboard app, another course for that. So again, a lot of links here, but I will, let's see here. I will get to the files here and show you what I'm talking about in these links. So that link, the OneDrive link that I put in the chat will take you, you should see these files here. So let me know if that worked for you. Yep, and I'll share, Andrew, yep. Okay, perfect. I'll share the deck in the live recorded session. So we'll again, with the start of each of these sessions, I'll go through all the mechanics of this again, because there is a lot of material, a lot of files here. But again, in this OneDrive link that you can download these files, I have these TSA important links, which again summarizes the course file location, the Slack invite, the survey, and then also, just in case you don't have these on your calendar yet, I'm going to throw those in the chat so you can add these to your calendar. So again, a lot of links here, but I'll go through these at the start of each sessions, but this summarizes it. So in case you're trying to find all the links for the course, it's in this important links folder here. All right, so let me pause there. Any questions, comments, confusion? Again, there's a lot of stuff. I'll go through this at the start of each live session just to make sure you've got all the files and know the course logistics. But any questions, comments, confusions that I can answer right now while we're going through this? All right, well, we'll keep rolling here. And again, the course platform, go over here. When you log into the course, you should see the course introduction, how to transform a messy P&L, the metrics foundation, and then pillar one growth. And then after that, the rest of these lessons are dripped each week that we'll cover in the following week. So this is what you'll see when you go into the course platform. And again, if we go into one of the video lessons, this is where we have the video lessons. You can post your comments and questions, and then also access the downloads. So I'll post the slides to each video lesson in that specific module. And in the live session recordings, I'll also post any of the slides that we went through in those live sessions. So the downloads there. All right, I'll come back to the slides here.
Ben, quick question on that content that's on the site. If you were to draw a Venn diagram, if you will, one is the the site and the materials on there, and the other circle is kind of what we're reviewing in these live sessions. How much are those overlap? Are they one and the same, or should we kind of go through all the content on the site? What's that look like?
Yeah, so good question. So it's very similar. So each week those lessons will be dripped, and then it gives you time to review those lessons, and then I'll cover those lessons in the live session. So it just depends on your learning style. If you'd like to prepare, watch the lessons prior, and then we'll cover those in the live sessions. So the video lessons will be very similar, but sometimes I tweak the live sessions just a bit based on just kind of latest available kind of teachings and data.
Love it. Thank you.
Yeah, yep, absolutely. Yep, great question. Let's see here. Let's see. Question off topic from Dominic. What's the courseware? Yeah, it's Kajabi. Yep, absolutely. It's Kajabi. So again, the course files. This is in the OneDrive link that I sent in the chat. So in this benchmarks folder, I have tons of reports that I've gathered over the years of the KeyBank SaaS survey, the Iconic report, OpenView reports. So it's a great library of reports related to SaaS metrics and benchmarks that I've collected over the past couple of years. And then we have the 5-pillar metrics framework, which of course I'm teaching in this course. So that's an Excel file that has my dashboard of the 5 pillars and the metrics that we'll cover. And then also there's a lesson on the messy P&L transformation, because not everyone has that perfect SaaS P&L, and we have to convert that to a nice SaaS P&L to manage our business. So those are files related to that. I'll send Kate, I'll send the OneDrive link again in the chat here. Let's see if I can, just one second, I'll send that again. Here it comes. So this is the OneDrive link. And then also there's a Word document in there that has all the important links. All right. So again, this is the OneDrive link. You'll see all the files in here. And then we have the Acme SaaS Company financials, and that's in the on-demand video lessons. When I open up the Excel template, that's what I'm reviewing. So it's a great quick start for your company where you can input your data and it flows into all the SaaS metrics tabs. So a great quick start. And also it creates a file that then you can upload into my SaaS metrics dashboard app to display your SaaS metrics. So again, we'll get into that. Also have a CRM setup guide from Conduit. I partner with them on B2B sales and marketing. And then my SaaS models, V3.5, that's my latest, all my templates, my forecast models, lots of resources there to quick start your metrics journey. And then again, this is an important file, the TSA important links. So that's where I have links to, of course, the OneDrive, the Slack community, the live recorded sessions, so all the links that you need for this course. And then I'll get into these worksheet templates in a second here. So any questions on the files? Again, I'll repeat these at the start of each lesson just so we're clear on what files we're using for the course. And again,
quick question, Ben. What's the timeline for access to these materials? Because I recall you said something about 2 years, but if you wanted to have access past 2 years, what do you do about it?
Hey, Boogie. Yeah, so 2 years access to all the content. But again, yes, if you hit that 2 year and 1 day mark and you need an extension, I've had students in the past just email me and I can add an extension to that. So that's not a problem.
Okay, thank you.
Sure, you bet. And again, all the links in the course is in this Word document here. So a little bit about the July cohort. In the live course, I've had 400 plus students go through the course so far. In this July quarter, we have 90 plus students. In common roles, of course, heavily finance and accounting related, but now we're seeing sales, marketing, data analytics, other roles, product management, go through the course. And again, all experience levels here from analyst to CEO, which is okay. Even if you're a beginner or advanced user, there's always another step to take with your SaaS metrics journey. So always something else to get out and push your data forward. And then I also ask how many years in SaaS. So we have folks from no experience in SaaS to 17 plus years, most in that 0 to 7 range of SaaS experience with a median of 5 years. So again, all levels, but there's always something to take out of the course based on where you are in your journey to have the KPIs that you need for your business. And also learning objectives stated by the students. Again, of course, deeper understanding of the metrics, better KPI reporting, and with those KPIs, drive business performance. And this is coming up a lot more, land a job in SaaS. So you're trying to break into SaaS, you need to speak the language of SaaS. So a lot of folks, anywhere from analysts to experienced execs, trying to break into SaaS and trying to learn that language so they can be prepared for those interviews and those roles. And then also, if you're in SaaS, moving up to that executive level, so that you're prepared that you can speak the metrics that are relevant to drive your business forward. And then also in that file, in the OneDrive link with all the files, I have a TSA worksheet template, and I'll open that up just to show you, just in case this helps you throughout the course. So let me go over here. So now I'm in this PDF, and I created this. On Thursday, we'll do a self-assessment of where we stand with our SaaS metrics. But I created this just to help. If this helps, if you like taking notes, as you watch the on-demand video lessons, as you go through the live sessions, you can use these PDFs. I usually import this into my iPad and then can take notes on that. I also have an Excel version if you want to take notes in Excel version. But it just helps you organize your thoughts as you go through the course. So again, optional, depends on your learning style. I have the metrics focuser. As you watch those video lessons, you can jot down the notes so you're better prepared for the live sessions. And then if we scroll a little bit farther, as we're going through the live sessions, you can take notes, what are we learning, the key objectives, how this applies to my company. And again, usually bottlenecks with calculating SaaS metrics and the action items I need to take. So again, optional. If you want to use those in Excel, use them in PDF, import it into a tablet and take notes on these. But it could be helpful because we do cover a lot of content in the course. So that's the TSA worksheet template. And it looks like someone just joined. I'll paste in the OneDrive link again, so you can access all the files. So that's the TSA worksheet template v1.3. Again, if that helps you with taking notes, please use it. If not, it just depends on your learning style. Next, a key file in the course is this Acme SaaS Company Financials. So this is where I've set up all the metrics calculations. I go through these in the on-demand lessons, and this is a great quick start in your SaaS metrics journey, depending on where you are. So you're able to enter your P&L data, your bookings data, accounts, etc., all the data that we need to calculate SaaS metrics, and all that data will flow into those metrics calculations. So it's a great way to kickstart so you don't have to create anything from scratch. And again, in that zip file, I've got tons of templates, again, resources that you're not going to go into Excel and just start typing this out and creating it from scratch. So this will be a key file. And also this file, if you enter all the data that we need for SaaS metrics, it creates a CSV file that can be then uploaded to my SaaS metrics dashboard application. So you can benchmark your metrics and then also share your metrics with your board, your investors, potential investors, etc. And again, this is my metrics dashboard that we'll be covering in the course. And we're starting out with the growth pillar. So today we're going to talk about the accounting foundation and then bookings. We'll roll into retention, gross margin, profit, and OpEx, and efficiency. And it's set up this way because this really is our journey in SaaS metrics. Depending on where our company is, for early stage, focused on growth and retention. But if we're more mature, we're actually, of course, focused on all 5 pillars. And we'll talk more about that. But this sets up our journey in SaaS as far as what we need to track. And again, the right metrics at the right stage for our business. And I recently released the SaaS Metrics Dashboard app. It's a SaaS app where if you enter your data into the Acme SaaS Company Financials Excel sheet, you'll create a file that you can upload to the dashboard and then display your stats month by month and also benchmark against your B2B SaaS peers. So this is just an example of this company, new bookings. They're running at 117% growth, benchmark 50, gross logo retention 84, benchmark 89. So a great way to benchmark your business and publish your metrics to your stakeholders in your business. And it also includes charts, and you can see the 5 pillars up here. And again, the benchmarks. So in this case, CAC payback, they're running a little higher, and actually CAC payback is increasing versus the benchmark for their company around 12. So we'll get into the dashboard app. And a tool to source the benchmark data, great question. If you haven't caught me on a Monday Night Metrics with Ray Reich, I partner with Ray Reich of RevOps Squared. He is collecting what I'd say is the gold standard of SaaS benchmark data in the industry. So I have a special partnership with him where I have access to his data that I then publish within the into the dashboard app. And he just completed his 22 collection effort, which I'll also get access to, and I'll be able to publish that into the app. So I have a relationship with him, because the important thing with Saas metrics benchmarks, which we'll talk about, is those aggregate, Key Bank, great survey, but aggregate benchmarks we can't really apply to our business. We need to refine those based on the profile of our business. And we'll get into that. I'm so excited to talk about that. All right, any questions, comments? Again, throwing a lot of information at you, but it'll start to make sense here as we roll through the course and what we need for the course. But any questions, comments? All right, we'll keep moving here. And again, I'm in my home office, so you might hear barking dogs in the background. This is Max on the left. This is Millie on the right. So if you hear dogs, now you can put a dog's face to their names here. And again, your participation in the course, whatever you're comfortable with. You can comment and question in the course, which I'll respond to. You can, chat in the Zoom here if you have questions, or unmute your mic. So each cohort is a little bit different with how people want to learn and how they want to participate. But whatever you're comfortable with, open to chat, open to comments, questions in the course, of course, questions in the Slack group. And again, feel free to unmute your mic and tell us about your questions, your comments, your experiences. I'll pause here. Nitin, I don't know if I pronounced that right. Do you have benchmarks for SaaS Plus businesses which have uses consumption revenue? So, great question. Ray is in the process of collecting a usage consumption-based data set, so that will be coming. And then Atul posted some about, Morgan Stanley equity report. Yeah, Atul, if you want to share that in the Slack group, feel free, or post in the chat here. So again, ways to participate, ask questions through the course platform, through these Zoom sessions in the chat, or again, unmute your mic, tell us about your experiences, your frustrations, whatever it is, and we'll tackle all that in the course. All right, so today we're going to tackle the accounting foundation and bookings. But again, before I switch over to those PowerPoints, any questions, comments before we move on? Again, that OneDrive link will give you then the link to all the important links. And again, just hit me up in Slack through here if there are any questions that come up. But it'll make more sense, and I'll review these at the start of each session. All right, give me a second to switch over here. And then Dominic asked, will the Excel files run if I import into Google Sheets? Yes, as far as I know, tons of people have imported into Google Sheets with no problem. So that shouldn't be a problem if you prefer Google Sheets and you upload to Google. I know that's pretty popular, so that shouldn't be a problem. All right, so today we will start with the Accounting Foundation. I know we have lots of different roles in the course, but again, if you're in finance and accounting, this will hone in on how we can improve our accounting foundation. And say if you're in different roles, sales, marketing, executive, a little sneak peek as you're reading the financial statements to know what you should be looking for, or what you need to ask your accounting and finance team for. So right off the bat, this should look familiar to a lot of QuickBooks users. This is not a SaaS P&L, but it's so common within SaaS that we spit out this P&L from QuickBooks, and really we can't do much with it, right? It's difficult to interpret. There are too many categories. Gross profit is always wrong in the out-of-the-box QuickBooks P&L, zero P&Ls, or really any other accounting application. And there's no real way to take data from this to push into our SaaS metrics calculations. But this is so common, and throughout this course, you'll hear me talk about the SaaS P&L a lot, because there's so much data that we can pull from it, and just basic fundamental financial management that we need for our SaaS business. Now, this is what I consider a SaaS P&L. So you'll see this in my forecast models, my demos, my templates of how I set up a SaaS P&L. And running through this real quick, and again in the lessons, we'll talk about this in more detail, but I have my standard SaaS P&L set up here. And oftentimes I'll summarize bookings at the top. And we're going to talk about bookings today. But everyone wants to know bookings. How are we doing with growth? So usually I summarize that on my SaaS P&L. But again, with our SaaS P&L, we have clear and distinct revenue streams. We have our COGS categories, and this is pure play SaaS, where we'd have tech support, services if applicable, customer success, which of course is debatable, but if they don't sell, they're not getting comped, no quota, put them in customer success. And then cost of ops, or I call this DevOps, this is our hosting architecture. And then we have our OpEx section. So R&D or dev, sales, marketing, G&A being general administrative. Let's say 99.9% of the time, this is how you see G&A. It's pretty standard for public and private companies. What you may have up in COGS really depends on your business model and your revenue streams. For example, if you have a usage transaction component, you may have a COGS cost center with those expenses. Say example, Twilio, if you have messaging in your product. And then Patrick asks, where would you suggest putting customer success on PL if they aren't selling? So yeah, if they aren't selling, if they're purely focused on retention, then I'm putting them in COGS. But if they have a selling component, they need to close contracts, they get comped, they get commission, then you may look at, it could be an allocation between COGS and sales. Early stage, right? Everyone wears multiple hats, so that's very common. But as you get bigger, you scale, you mature, then these roles become very focused. It's easier to code. Oop. And I'll, we got some nice questions coming in. And I'll pause in a second for Q&A, but we'll keep rolling here. So again, we'll talk about this a lot, and there'll be an opportunity to ask questions around COGS versus OpEx, but an important concept within SaaS. But this is the SaaS P&L structure that I'm going after. I present it to boards, to investors, to potential investors, and I would say you're not really going to get, I would say, pushback if you've created your SaaS P&L in this format. And then just another P&L format that I like to use as a CFO, which I call my internal P&L. And you can see this is by expense category. So we can see how these are trending. So a good second format of our P&L that we can create from our accounting system or whatever analytics system we're using to pull data out of our accounting system. So just kind of food for that on a different P&L so we can see our major expense categories. So financial statements, although the SaaS P&L is so important, right? With SaaS, there's so much going on under the hood, under our financials, that we have to understand the economics of our business. So the P&L is part of that, but then we have to dig deeper to go under the P&L to get the data that we need to really understand the economics of our business. And there are three keys that I see every time when I'm working with SaaS companies, new SaaS clients, coaching SaaS clients, teaching in the course. So three things that come up over and over with setting up the accounting foundation for our SaaS company. And the first is the chart of accounts. And I'll pause here for a question or look through these. And then the tool asks, have you come across cash EBITDA, which takes into account change in deferred revenue? We cover that later. Yeah, I believe in my EBITDA section, yes, cash EBITDA, where you look at deferred revenue changes period over period, so you can get credit for that in your EBITDA number. So definitely have seen that. That's become pretty common, and definitely we'll cover that later in the course. And then Bonnie, if I mispronounce anyone's names, please let me know. What about sales? Could they also be included in COGS? No, I've not seen sales in COGS. Typically, they're in OpEx. Sometimes you see people trying to put commissions up in COGS. Again, I feel like it's non-standard. Sales, marketing, what I've seen always down in the OpEx section below gross profit. And then Dominic asks, if you're building a marketplace and one side of that marketplace requires integrations, do you put that integration work into COGS? Yeah, if you have ongoing integration third-party products or integrations embedded in your product to make it work, I'm going to code that to DevOps in COGS. And then Christine asked, what about customer support? Our support is separate from tech support or customer success. So Christine, it just depends, like customer support. I mean, that sounds like a COGS, but I'd probably have to know a little bit more about that if it's separate from tech support and customer success, exactly what they do. So feel free to unmute or just chat again about that. And then a tool, but customer success is in COGS, so some component of renewals. Right. Again, renewals, maybe customer success handles the presentation of the rule. They don't close it. But again, my big bright line on this is, do they get comped? Do they want to get that closed one? Do they want to get commission? Then we have to consider, should a part of their expense be in sales? So good questions. Again, customer success is one of those debatable ones.
Hey, Ben, I was just going to ask, this is Atul. So, I'm sure you're going to cover this later, but renewals also normally has like two components, right? You could have an upsell and just renewing the existing contract. So it would, just your thoughts whenever is the right time is sort of how do you categorize the upsell? Is that new bookings versus in the just pure renewing of the existing contract?
Great question. And actually, when we move to the booking section here, I'll cover that in detail. Yeah. But important concept. Yeah. Let's see. Christine says our team does order support and pure customer support, weighs heavily in order entry and collections. Sounds more like OpEx now that I think of it. Yeah. So order entry, collections, usually that's in G&A and accounting. Order entry, that can vary sometimes, right? That's a sales thing. So maybe this could be an OpEx item. And then again, 3 keys, and I see this over and over with SaaS companies, with my client base, my coaching base, and in this course. There are 3 things that always come up that we need to progress our business forward. 1 is the chart of accounts, 2 is department coding, and 3 is RevRec. And even if you're not in finance and accounting, important concepts to understand as readers of your financial statements, asking your FP&A, your finance and accounting team about the data that you need to either manage your department or your business if you're a C-level, a little bit behind the scenes of what we need if we feel that our finance function or the financial statements are not quite up to par. So first is the chart of accounts, and this is behind the scenes what happens in accounting. And the chart of accounts is simply a numerical and descriptive listing of all the accounts on our general ledger from the balance sheet to the income statement. So when you hear accountants say, hey, we're making debits or credits, we're making entries, we are posting these revenues, these expenses to general ledger accounts in our accounting system. And typically it has this set up, I'm missing the next there, but where our balance sheet is assets are 1 numbers, 2, 3, and so on. And typically, then we get to our P&L. Our revenue GL accounts start with a 4, cost of goods sold is 5, OpEx is 6, and then non-op expense is 7. So a very common setup within our accounting system. So that's the chart of accounts. That's when accounting makes these debits and credits, makes entries that then create our financial statements. So at the most basic level, our GL is a GL number and name. And then what we do is we categorize these GL accounts into our financial statements. So you can see on the balance sheet side, we've got some checking accounts, some cash accounts, and those roll up, if we were looking at our balance sheet, into the cash section on our balance sheet. So there's a couple things here that we need to have the detail in order to analyze our SaaS business. One is revenue definition. This comes up all the time. Really important that we have clear and distinct revenue streams. So do we have subscriptions? Do we have transaction, usage, professional services, managed services, etc.? Because we do not want to mix recurring revenue with service revenue, for example. And you see this where we're coding services revenue to our subscription revenue, or maybe we're coding usage revenue to our subscription revenue. So behind the scenes, we have to make sure we're coding our revenue to the proper GL account so we can roll this up to our SaaS P&L. And this is where we can get in trouble, say in due diligence, if we're mixing revenue streams, or even I've seen someone who raised a huge as a Series B or C, where they were coding everything to subscription revenue, but they actually had a usage component, and they had to go back to every single contract that they sold and recategorize their revenue based on how they contracted the services with their customers. So really important to understand your revenue streams, the necessary GL accounts, which then roll up to our SaaS P&L. So you can see here, we have our GL accounts, and then these are the roll-up categories that you'd see on our SaaS P&L. So maybe we had some one-time software revenue, subscriptions revenue, maybe we still have perpetual licenses and renewing maintenance revenue, services, and so on. So really important to have that proper setup. The tool asks, what are the 3 trial balance columns here? And it depends on your accounting system. It's really just a categorization. So we're saying at a high level, this GL account is a profit and loss account, so a P&L account. Then a little bit more detail, these GL accounts are revenue accounts. You can see down here, no one has raw materials, but this was from an old GL account, that this is part of COGS. And then even more detail here in trial balance 3, that then we're rolling up this GL account into, say, training, consulting, installation services into services revenue. So it's just another level of detail and how we categorize our revenue and expenses. Yep. So if we have proper GL detail and you look at your SaaS P&L, it's like, hey, this is not looking right. You can go behind the scenes, recategorize things to get the expenses, the groupings correctly on your SaaS P&L. Now, one thing, you can also create GL accounts for different product lines if you have maybe just a couple product lines. Now, if you offer a couple hundred SKUs, you're probably not going to create GL accounts for every single SKU. So there's a little bit of strategy when you set up your chart of accounts so we can track the revenue streams correctly. And again, a lot of different accounting systems out there. See a lot of people using QuickBooks Zero, and then as you scale, maybe a NetSuite and Sage Intacct. But each one has a little different category for how you can code revenue expenses to more detail. In Financial Force, they call it a dimension, and NetSuite a department. QuickBooks, it's a class. And Zero, I believe, it's categories. So I'll show you a practical example of this in a sec. And then on the expense side, we must also have clear expense general ledger accounts, just like our revenue. And key areas that I always focus on is the wages, taxes, bonuses area, marketing, and then non-op. So again, we need enough detail. We don't need 1,000 general ledger accounts, but enough detail that we can analyze our data correctly. So common things that I see in the expense area is that we're coding all wages, taxes, bonuses, commissions to one GL account. Those need separate GL accounts. You can see in this example, we have a GL account for salaries and wages, commissions, bonuses, overtime pay. Really important, because if you think about a SaaS P&L, the largest expense on the SaaS P&L is employee-related expenses. So we need a lot of detail there so we can track bonuses, so we can track commissions. And if you're capping R&D, those get their own lines as well. Another area of focus is marketing. Do we have just one GL account that says marketing and that's it? Or do we have GL accounts that say conferences, trade shows, paid ads, based on our channels of acquisition? Because this is important for the marketing team, so I can provide them enough expense definition so they can see where they're spending their money, align that to their lead flow. Maybe they can calculate cost per lead or opportunity creation based on all of these channels. So marketing is another area that needs a bit of focus to make sure we have enough expense coding there so we don't have to allocate a bunch of expenses to different channels. And then non-operating, this is interest, income, interest expense, etc., that gets its own section as well. And then Dominic asks, would you ever categorize DevOps labor here as COGS? Yes. So DevOps, if you're at the scale where you have DevOps engineers, platform engineers, keeping the resources, keeping Amazon hosting going, deploying instances within your hosting account, yes, those DevOps engineers, I'm coding wages, taxes, benefits to COGS to the DevOps cost center. Yeah, I hate to. It was CFO. Yeah, I hate to say. Yeah, keeping the lights up. Yeah, exactly. And then Erica asked, because someone seconded that, related to the Atul's question: are commissions given for renewal contracts and COGS or sales and marketing? So for me, any commissions paid out are always going to hit either sales and marketing, most likely sales. So usually you do not see commissions hitting your COGS area. So typically a sales expense. So I'll pause there. Any questions on the chart of accounts and that definition? Really important. And that's whenever I take on a new SaaS client, we're always looking at the chart of accounts. Do we have this structured correctly? And then Sandra asks, do you have a list of dimensions departments that are best practice and that will allow for more detailed analysis as an org matures? Yeah, and I'll get to the expense coding here in a section and those common departments that I set up. And let's see. And Connor states, do you have a preference between capitalizing development wages versus expensing those costs regardless of cap? Yeah, capitalization, a whole nother topic, but everyone does it a little differently. Usually I see that a little bit more later stage where it's like, all right, we're going to have an audit. We're going to, have investors pour through our financials. We've got to get up to GAAP, capitalize on our R&D. Early stage, I don't see that. You just expense it because you have to do that right. You'll get into trouble down the road if you're not capitalizing development correctly. And then maybe you have to unwind all of that. So usually my preference is what's on the horizon, what's coming up. Do we need to be audited at some point that we now have to get to GAAP? So looking at that horizon. And then Andrew, you raised your hand. Do you have a question?
Yeah, quick question, Ben.
Yeah.
Just curious, how far back would you suggest reclassing and restructuring the chart of accounts for versus historical period?
Yeah.
Is it typically that fiscal year, most recent full fiscal year, so you have good comparison numbers, or does it really depend case by case on the company you're working with?
Yeah, no, great question. So I think that, this question comes up a lot where, say, we're in July, and sometimes I do have founders and their teams, they'll go back to January of 2021 and restructure and reclass their expenses to the right buckets at a high level, right? Where they're making those reclasses. So it's always nice to have one fiscal year that you can compare to with that proper structure. So it just depends on how big you are, how much work it is, how much accounting firepower you have to go through and look through that. But that's really common where then they go to their accountant and they have them restructure and reclass back to that previous fiscal year. Or, if we're in December, maybe we just get this fiscal year correct, so we're ready for the next fiscal year.
Got it. Makes sense. Thanks.
Yeah. So it just depends on how much effort, how big you are, but that is very common where they do go back. And then Till asks, when does software cap become an issue? I'd say if you're greater than 10 million in revenue, definitely we should be GAAP IFRS and capping, because at some point we're going to have an audit. It becomes an issue when you are required to have an audit. Say you take on debt and the covenants say that you have to be audited each year, or someone makes an investment, or you're bought out by PE and now we've got to get the accounting function up to date. So for me, it's looking at that horizon, what's coming up, that there will be a third party that's requesting audited GAAP or IFRS financials, where the auditor is going to come in and say, hey, you need to start capping. We've got to go back, reclass all this stuff. So for me, it's that horizon, what's coming up that we need to prepare for, say, an audit that's going to be requested by a third party. And then the auditors are going to be expecting R&D cap. And then asked, do any of these accounting software offer something specific for SaaS, which makes the life easy? Unfortunately, not that I'm aware of. Usually they come with a stock chart of accounts, and then you will need to modify the chart of accounts and the department structure for your business. So unfortunately, they should have a quick start package for the chart of accounts, but I'm not aware of that. And then Patrick asks, I think you got it, specific to okay.
Yeah, I think your point around auditing is the main driver, not necessarily the round. So thanks.
Yeah. Okay. Yeah, that makes sense. Yep. Yeah. All right. Great question. So moving on, step 2, again, another area that either you're not doing or that can be improved is department coding. And then one more question by Andrew. Do you always modify the chart of accounts in accounting software, or do you just map existing chart of accounts to new COA in your Excel files? So one is, yes, if I'm transforming, say, a messy P&L, I can do that offline in Excel and remap those GL accounts. So it depends. As a placeholder until we improve the chart of accounts in our accounting system. So we can do this offline, which I have a video lesson on that. But in the meantime, we are improving our chart of accounts in our accounting software, so we don't have to do as much offline manipulation. So step 2 is department coding, right? Because we need to avoid the big bucket of expenses, which you see quite common for early stage SaaS, where we're just coding things to all these different random accounts, but we don't know really where we're spending our money by department. So whenever I'm looking at my accounting system, I'm looking at that department coding. And again, each accounting system is a little different. Maybe we call it departments, dimensions, categories, classes. But by doing this, it adds another layer of dimensionality to our data. So common departments, of course, right out of the box that we need to look at, and again, depends on our business model. But typically we have, and again, maybe at some point, maybe at a stage where you don't have these departments yet, but at some point, we're probably going to tech support, some sort of customer success function. And again, the roles vary widely within that. Sometimes, right, professional services, if we need to train our customers on our software, maybe that takes a couple weeks up to 12 months. It just depends. So we have a professional services group. Then we have our cost of operations or DevOps. So this is our hosting costs, our third-party products embedded in our product to make it work. And if we're large enough, those DevOps engineers, who we could say are keeping the lights on our hosting instance. Then R&D, sales, marketing, and G&A. Now, this is what I'd say is out of the box that I look at with every SaaS client of mine. So we have the departments, and then usually there's some sort of coding structure within your accounting system that you can then code the expense to the proper department, which will make our life a lot easier. And this is a practical application. This is out of the Financial Force accounting system. And this is a bonus accrual example. So again, this is how easy it is to code to the department level. Here I'm making a bonus accrual to G&A. So I'm accruing to the P&L, accruing that to the balance sheet. And then I'm posting it to this dimension, which in this accounting system was the department. So we're saying, let's post this bonus accrual, the expense and the accrual to G&A. And that's how easy it is to code expenses and revenue to that next dimension with your accounting system. So if you're in finance and accounting, have control over your debits and credits, this is definitely a consideration on how you want to set this up. Or if you're the reader of a financial statements in your SaaS business and not quite getting the detail that you need, you can ask them, how are we posting this? Are we coding expenses to the cost center level, to these dimensions? How do we have our revenue GL account set up? How do we have COGS versus OPEX set up? So we can get the proper SaaS P&L. And then finally, RevRec here, and I'll pause here. Demi has a question. I use 0, which doesn't allow for roll-ups like QB. Would I have each people expense duplicated under each department? So I have a few clients on 0. Most of them are using what you're describing here as an inline structure. So you're duplicating GL accounts where in Remco, you can use tracking categories. So either tracking where you have that dimension, or yes, you're creating duplicate GL accounts. So you have marketing salaries, sales salaries, dev salaries. That's sometimes easier, but it doesn't create that multidimensionality that if you hook up a CPM system, hook up an analytics system to your accounting data, you lose a little visibility there. And then Remco, I don't know if you have any thoughts, comments on zero and tracking categories, but usually that's the best route because you just have better detail there. But I see it both ways. Again, that inline structure where you're duplicating GL accounts, or you have just one wage account where you code wages, but then again, that second level of coding is to the department, so we can create the proper SaaS P&L. So the final step here that I see, especially early stage SaaS, is RevRec. And usually it's because we're not doing it. Sometimes doing it incorrectly. But if we look at the two P&Ls here, the one in yellow here, you can see our total revenue. We have recurring revenue and services revenue. Then our revenue is going from 62 to 30 to 230 to 85. This is usually a dead giveaway that we do not have revenue recognition in place. Because usually, right, our recurring revenue is not going to go from 50 to 25 to 225 and back down. When I see that, I definitely know that we don't have RevRec in place for our recurring revenue, for our subscription revenue. And as a result, you can see our gross margins are jumping all up and down, and we can't manage our SaaS business this way. Now, this is very common with early stage, but I'd say usually around that couple to 3 million AR mark and above, that's when we've got to get serious about accounting and put proper RevRec in place so we can understand our margins by revenue stream, because margins are needed for certain SaaS metrics. And then the bottom P&L here in green, you can see consistent recurring revenue growing every month, and our margins in the mid 80s here. So maybe we're invoicing monthly and we don't need any RevRec, but if we have any invoice terms longer than a month, we need to apply RevRec so we have the data that we need to manage our business. Let's see, just checking the questions. If you have annual bookings, it could look like that. Yes. So if you have annual invoicing, it's going to look like this because you're on a cash basis. So you invoice that annual invoice for 12 months of revenue and you post it all here. And then maybe a couple smaller invoices here. So yeah, that's cash basis invoicing and no RevRec in place, which again is fine early stage, but eventually we have to put RevRec in place. Because if we think about our process behind the scene that accounting is doing, right, it depends on if you're self-service or if you have a bookings process, but right, the software contract is signed by both parties. We invoice the customer for our software and our services, and then we apply RevRec to that invoicing. So what's going on behind the scenes is that process. And oops, sorry. And just a quick primer on deferred revenue and invoicing and RevRec is if we do have annual invoicing, we should be creating deferred revenue on our balance sheet. So for example, if we invoice a customer for $12,000, they have a $12,000 one-year subscription. What we do behind the scenes in accounting is we debit AR for $12,000, assuming we're not charging them immediately via credit card. So they owe us $12,000, and we're posting $12,000 of deferred revenue. And then every month we bring a pro rata amount from our balance sheet to our P&L and recognize that revenue, so $1,000 a month. So that's what's going on behind the scenes when we transition from cash-based invoicing to the proper RevRec, which creates deferred revenue on our balance sheet, and then the proper revenue on our P&L. Pause here for a few questions. Oh, so Tool, if you're invoicing monthly, can you clarify that process? Yeah, usually if you're just invoicing in monthly terms, usually you're not going to have to put RevRec in place. It depends on how stringent your auditors are, but I've been in those situations where we invoice monthly and they are not really caring about the cutoff as long as we post to the right periods, especially at year end, right? Because you invoice for a month, you earn that revenue for that month. So typically there's not any RevRec process in place. Now, if you have a mix of monthly, quarterly, annual invoicing, your RevRec engine is going to process all those invoices. So you will see RevRec on monthly invoicing, but if you're just monthly only, typically you're not going to see any RevRec on that. And then Sohail asks, how do RevRec of doing implementation of this contract is for 24 to 36 months? Yes. So if you have professional services implementation, And I think I have it somewhere in the course where, yes, we do have to consider RevRec for that. So if you're invoicing, say you sign them up for 100K of implementation revenue, and you invoice them all at once for the 100K, but it's going to take 24 months to get them going, you will have to apply RevRec, either on a percentage of completion basis, a milestone basis. So definitely services, if it's material, big invoices, you do have to look at that. The auditors will usually look at a year-end cutoff for the RevRec on your services. And then a request here, can you please go over the simple definition of bookings and billings and revenue? Yes, definitely. We'll get to that in the next section here where I go through bookings. And so, yeah, implementation fees billed up front at the time of contract sign. Yes, depending on how material, I would definitely look at RevRec on those services revenue. And then book, yes, what's typical? Should AEs earn commissions on bookings or invoice and paid deals only? So I see both. You book it, you pay the commission, or you wait till you get paid. So it depends on your commissions policy and those payouts. And again, my opinion, my experience, but feel free, if you have opinions on some of these, feel free to chime in and share your experiences on some of these, because I know we have a lot of folks with a lot of experience. So please share your experiences as well. And then Park asks, Ben, Saas Optics only defers the amount of recognized revenue until I invoice. Is that correct? It does not record the entire unbilled AR and deferred revenue until invoiced. Yeah, so usually, you don't create any deferred revenue until the actual invoicing happens, which posts it to the GL. Usually you don't see unbilled revenue within SaaS. You see that in other industries like construction, but usually it's not, deferred isn't created until you invoice it. And then Remco asked, do you often create multiple deferred revenue counts matched to corresponding revenue counts for different streams? Yes. So I'll have a deferred revenue count for subscriptions. If you have any deferred on usage or transaction because it's some sort of usage drawdown, and services. So yes, I do have separate balance sheet accounts for deferred revenue because that makes my balance sheet reconciliation that's much easier. I can have a subledger that ties to each of those GL accounts, which then helps me in my audit process. So great questions. And again, we're hitting on high level stuff. We'll get into the detailed lessons on some of these, which you'll have a lot of time to ask questions as well. Another question, when should we switch from cash-based to RevRec model? Certain revenue threshold or stage? I'd say my revenue threshold is 2 to 3 million AR and above. So at 3 million, definitely start considering, because I've seen with one SaaS client, they were only $1 million or $2 million, but they were getting bought out. It was cash-based invoicing, and it was just confusing the potential investors, the potential buyers. So couple million, 3 million AR and above, I would say put that in regardless of your series A, B, C, etc. stage. And then Anna asks, if you have a multi-year deal, example, 2 years of a 200K invoice annually, is your deferred revenue 200 or 100? Yep. So for me, if I'm invoicing annually, it's going to be 100K of deferred revenue, not the 200K, because I haven't invoiced all 2 years yet. So I'm going to, a lot of great questions. Susan, there'll be a recording that I'll post tomorrow. So let me pause there. We'll tackle some of these questions in a bit, and we'll move on to the bookings lesson. But just a quick snapshot behind the scenes of that deferred revenue process. All right. I am going to, go over to the bookings lesson, and we'll dive in here. Oops. So bookings, and again, I'll have pauses for Q&A in here, but bookings, an important concept within SaaS, even if you're self-service, and we'll get to that. So if we look at the pillar here, and again, if we don't finish this will roll into Thursday, and we'll talk about CAR, ARPA, and the quick ratio. But looking at our SaaS metrics framework here and the growth maturity moving left to right, bookings, an important component. This was a key report that I'd run every month on day 2 or 3 of close because it feeds so many SaaS metrics. So we'll talk about new bookings, expansion, and renewals here. So first of all, why is it important? Well, of course, ARR, MRR, recurring revenue is the life of our SaaS business. We need to understand how much we're booking each month. Do we have growth? Do we have expansion? Do we have contraction in our SaaS business? And again, this is my top 5 report. Bookings data drives so many decisions on staffing, on product, metrics. And of course, we have to calculate commissions off of our bookings data. Also, there's got to be balance between the investment in our go-to-market motion and the bookings that we're creating. And again, we'll get into sales and marketing efficiency metrics. So as you start to invest heavily in sales and marketing, what bookings is that producing? And is it efficient, inefficient? How do we judge if we should invest more, pull back with our go-to-market motion? And of course, the big thing as you scale, is our go-to-market motion efficient? Is our go-to-market engine efficient? We're spending millions of dollars there. And what's the ROI? So we have to understand the inputs, the expenses that go in, and then the bookings that come out. And definitely at the board level, bookings always discussed, even if you're self-service, we'll talk about that. How do we track for bookings for the month versus budget? How is it tracking in the forecast? We forecast our SaaS business based on our bookings and that pipeline. So definitely something that's going to be discussed at the executive level and the board level and at the investor level. So the what with bookings. So a booking is simply an executed contract signed by 2 parties for our software services, etc. Or sometimes customers don't sign contracts, they issue POs as acceptance of that contract. So booking is simply that executed contract. And new bookings focus on revenue driven from new customers to our SaaS business. So brand new customers, and what revenue are they signing up for? Now you may say, Ben, hey, wait, I don't speak the bookings language. I've got a self-service SaaS product. We don't have customers sign contracts. They just agree to terms and conditions on our website. They sign up, put their credit card in, and away they go. However, this is still applicable. The concept is still applicable, self-service, even if you're lower price point, high volume business, because we still need to understand the activity within our revenue base. What's that new MRR that we're driving each month? Are we driving expansion? Do we have downgrades in our product? Usually that's then coming from our payment data, Stripe, for example, and I'll take that data and convert it into a bookings report. And also, even if you're self-service, we still need to know that new activity to drive our sales and marketing efficiency metrics. Now, there are several types of software bookings. We have new and expansion and contraction that typically we track in our CRM system. And we also track our bookings by revenue stream. And I'll show you my template here in a bit. But on the software side, we're tracking, say, our software bookings. If we offer professional services, I'm also tracking that each month. How much in services revenue did we book? Maybe we didn't execute it, invoice it yet, but how much did we book off that contract? Now, transaction or usage, this gets a little iffy. It could be difficult to pinpoint your bookings here unless you have some sort of tier or contract minimums that you can determine a booking value. So transactions, it's a little bit different. And then maybe you have some other revenue streams. So when we talk about bookings, it's not just our recurring revenue, but it could be services, transaction, and other. And then with new business bookings, again, this is new revenue from brand new customers. We're tracking both dollars and counts, whether that's a customer, an account, a user, or I have some clients in healthcare tech, providers. So we're tracking both dollars and the number of new customers that we're winning. And we have to be consistent here. We should track on an MRR or ARR basis. Either way, but we just have to be consistent. So what's that language we're speaking internally? Usually it's ARR, but sometimes if you're self-service, you think in MRR terms. So helpful tips with bookings. So again, don't mix total contract value with ARR and MRR. I saw with one SaaS company, as they were close winning opportunities, their bookings number could have been a 2-year value, a 3-year value, a 1-year value. That really doesn't do us any good. We really don't know how much growth we're actually capturing. So typically when we talk bookings, we have to be consistent. Usually I talk on an ARR basis, but again, you could be in the MRR world as well. Now we can also track TCV, but when I create that bookings report, it's on an annual basis. So everyone knows how much annual revenue we're going to bring into our business. And quick question here, RemQuest, do you see bookings coming from your CRM system while RevRec is the accounting system? Yep, absolutely. So, and I'll talk about data sources, but bookings typically coming from your closed won opportunity report in your CRM system, so either through Salesforce or HubSpot. And then RevRec, yep, all that RevRec data coming out of our accounting system, or if we have a third-party product such as Saas Optics coming there. And I'll see this, what part of total contract value would not be ARR? So again, it's just putting this on a common basis that when we talk bookings, if I sign a 3-year deal, $100,000 a year for $300K, right? Let's just call that's $300K of total contract value, but my bookings report will show $100K of ARR. So kind of one and the same. It's just making sure we're consistent with that tracking. And in our CRM setup, in the opportunity setup, are we tracking TCV? Are we tracking on an annual basis? Really important to have that CRM set up. And then Karen asks, what accounting software is best software for RevRec, and will it pull information from Salesforce? Yes, it will. And we'll get to that in a second when we talk about systems. And then Diana asks, would you include startup setup fees in ARR? No, those are one-time fees. I would not include startup setup fees in ARR. And again, remember, bookings are revenue streams, distinct revenue streams. So recurring revenue is separate from setup fees from one-time revenue. I'm going to track startup setup fees as services revenue and as services booking. So really important to not mix those revenue streams. And bookings and due diligence, if you're going for funding, if you're selling your company, always requested. Usually 3 years of history is a common request. All your closed won bookings. So what new business did you close? What expansion business did you close? A contraction, maybe by product line. So again, good CRM hygiene so we can pull this data not for only our internal use, but also in due diligence. And remember, a booking is not cash or revenue yet. It's simply an executed contract. So I know there was a question about the difference between bookings, billings, and revenue, which I do have a post on that. I'll share that on my blog. But again, a booking is an executed contract. It then comes over to accounting to invoice. We send the invoice, let's say it's a $100K annual invoice, right? That's not cash yet unless we charge them via credit card. It's not revenue yet. We simply invoice them, we defer the revenue, and then during our close process, we run a revenue recognition process, which creates the journal entries to then record that revenue. So it goes from bookings to invoicing, or some people say billings, to then RevRec, and then eventually to cash collections. So I'm going to pause here for questions. And we're 13 after the hour. So and feel free to unmute if you'd like to ask a question or via chat here. And tell us, if you have contracts multi-year and TCV is calculated, how do you translate to annual contract value or ARR? Yeah, that just depends. Is it 100K per year, or is it 100, 120, 140? Then you have to make kind of internal judgment calls. The average contract value could be the average of those years. Usually in my bookings report, I showed the first year only. And also commission consideration. You can't make that decision in a bubble. You've got to talk to your sales team. How are they calculating commissions? That we're all on the same page of how we're reporting that revenue.